Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The weak US dollar on Friday fueled a very volatile session for the Australian dollar, and since rebounding in front of that level of 72.55.60 after posting a low of 73.17, the market surged to a high of 74.30 on Friday, and now at present looks towards a region of 74.55.65 once again for the start of this week. It is assessed that the market will foul against this challenge to the top side, and overall I expect to see supply return from 74.55.65 and look down towards the region at the moment of 73.60 and then down towards 73.15 and eventually to 72.55.60. The dollar index very notably has fouled at 95 figure 20 again, as the undefeatable level still remains is the fact that the euro has found momentum once again and posts a long-legged doji 2 days ago, and now from the current price structure is looking towards the top side of the range, currently holding at 117.40.60. It is assessed beyond there that the market will foul, and I am a seller into rallies, and I'll be looking to sell above that level with a cap still holding around 118 figure 50. Overall, the dollar index should recapture its bullish charm and see the euro once again turn back towards the support, which is seen at 116.70 and then down towards 116.20 to 115.55. The dollar yen price action plummets on the back of comments from Friday of President Trump after he continues to speak against the Fed about rate hikes, which triggered the US dollar weakness and extended the move for dollar yen now to challenging this level, coming in around 110.75.90. With the low this morning being 85, the market has respected this level around this trend line. We are oversold from a technical point, but the MACD is still a little bit on the negative case. Do be a little bit on you close to your guard. But the fact is, if we do get a break of 110.75, this could trigger further stops towards the region of 110.15.25. Then the demand might come back into play. But with the outside range day, as you can see here, clearly supported the decline, and with Trump's negative comments to the US dollar does not help matters. The British pound is also gathering momentum, but at this stage still sees a point of 132.0520 as a cap. I do expect to see the market turn back towards a bear case and look towards a region of 128. Also to note though is Theresa May's government still remains quite fragile after the two resignations from Boris Johnson and David Davis, along with the fact that there is still risk that Boris Johnson might even contest Prime Minister Theresa May's chair, therefore could actually put further pressure to the pound. Overall, as I say, I'm not bullish at these levels, and I do expect to see a decline very, very soon. Since the gold rebounded off 12.10.12 level, the market is holding and presently still staying in a bullish sentiment. It is viewed that the market still has legs towards the target of 39 to 44 to 46, and then maybe start losing some of your longs if you did acquire them around that 10-12 area. But from a technical point, it does look bullish, so I'm not turning my view as of yet. And rounding off with oil, well, the market is still pretty much directionless after the last 3 days, and the long-legged doji that's in play still supports the case of the downside. I expect to see a challenge of $66 a barrel that could progress down towards 62, with any upside attempts failing towards the region of 69. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day and a great start to the new week.